Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the weekly time frame, where we're looking for a bigger impulse in a 5-wave structure in yellow, currently working on the yellow wave 3 with the green count 1, 2, 3, 4, 5. So in this scenario, we expect 2 more pushes to the upside, wave 5 in green and then another wave 5 in yellow to finish the bull market. Currently working on ending this wave 4 here. We are currently at the final common target for a wave 4, which is the 0.5 Fibonacci taken from the low to the high of wave 3 on a logarithmic chart, with also the logarithmic Fibonacci setting, giving you a target of 53.3k. The invalidation would be the 0.618 at 49.3k. After wave 4, we're looking for price to move towards the upside impulsively, looking for this wave of 5. Now the common target area for your wave 5 is between 80k and 105k. The lower price action locally goes, the smaller the target area for wave 5 becomes. Now a wave 4 of a higher degree, which is the yellow wave 4, tends to retrace to the price action of wave 4 of a lower degree. This is a guideline in Elliott waves, and therefore labeling this as a green wave 4, which is the lower degree wave 4 because it is a subdegree count of the yellow wave 3, the target for your higher degree wave 4, the yellow wave 4, can therefore be between the high and the low of your green wave 4, which is the box that you see on my chart, giving you a target area between 73.8k and 53.5k at the moment. After this wave 4, we look for an impulse to the upside in a wave 5. The other bullish scenario on the weekly time frame is that your wave 3 is already finished and we're working on a bigger yellow 4 with another move towards the upside in wave 5. So in this case, we only have one more push towards the upside, but in both cases, you're looking for at least one more all-time high. The common target for your wave 4 here is between the 236 and the 05, so it is a bigger target area, 57.142.8k, taken from the low of 2 to the high of 3, with the invalidation being at 37.7k. Now locally, currently the highest probability scenario is a zigzag to the downside, a 3-wave corrective structure, after which we then expect continuation of the trend towards the upside. The probabilities are high for this move to the downside to be part of a corrective structure, either a wave C or a wave Y, in this scenario wave C, and that is because wave B touched the 886 taken from the start to the end of A, which is a common target for a wave B, and it is a rare target for a wave 2, which lowers the probabilities that what we're looking for here is a wave 3 to the downside for much lower prices. The common target area for your wave C is between the 1 and the 1.618, a trend-based fib extension taken from the start to the end of A to the end of wave B. Now the most common target area is the 1 to the 1.236, so that would be 54.6 to 50.5k, which is pretty much the area that we have hit. As you can see, the 1-to-1 over here was nicely tapped. Now in this area, we do have some additional support areas. First of all, the blue box here, 51.6, 51.9k, and then below this, 49.1 to 49.8k. And this wick over here was made on top of a daily naked point of control, as shown in previous content. If we then look at the subdegree count of the ABC, so now you see the blue count as well, then in wave A we have a 1, 2, 3, 4, 5 wave leading diagonal structure. Currently have wave B on the high here. However, I want to talk about the impulse to the downside that you see in blue with the help of something that GZ had posted in Discord. So GZ, a great Elliott wave counter himself, posted this picture here in the Discord group, which is all about the 2 highs that we have here. Because if we count a wave C to the downside that is finished here on top of the 1-to-1, we can count it 1, 2, 3, 4, 5. Now, first of all, your wave 4 here is shorter in time than your wave 2 because your wave 4 ended before the blue vertical line on the chart, which is a fib time taken from the start to the end of wave 2. And you can see that the end of wave 4 was made before the 1-to-1, meaning 4 is shorter in time than 2, which is uncommon, as most commonly in an impulse, wave 4 is longer than wave 2. So it does impact the probability slightly, but maybe even more important is what we have going on at the high. So if I quickly clean up the chart and remove the ABC, and we're just going to zoom in to the high of this wave 2 here, then you can see that actually on my chart, the high was not taken. And I used the Coinbase chart here. It was just a few dollars difference, but you can see it actually missed out on taking that high. Now what GZ has done is he's been looking at different exchanges and he checked, hey, is this high over here, right, higher than the one on the left, yes or no? Because in an impulse, 1, 2, 3, 4, 5, wave 2 moving above the origin of wave 1 is an invalidation, and it's all probability. So even though on some charts the high got taken and on some charts the high did not get taken, if the probabilities are very much on the side of, hey, that high got taken, it just lowers the probabilities for this impulsive count to the downside. No? So what he has checked is OKX, Binance, KuCoin, MEXC, HTX, Bitstamp again over here, USDT and USD, then Coinbase, Binance, and Kraken. And you can see that on pretty much all of the charts except for Bitstamp and Coinbase, which is the chart that I have in front of me, the high here got taken. Also on the index chart, by the way, the high got taken. So you can see that the probabilities are higher for this high to actually be taken when we compare all the different exchanges compared to using a scenario that you see on the chart here, where we then count this high as a wave 2, because it would go against the probabilities of the high being taken, which means this is an invalidation actually of this impulse 1, 2, 3, 4, 5 to the downside. Now we can count it slightly different. So if we then say, okay, you know, we have those probabilities, GZ has checked it, we put wave B over here, right? And then we count an impulse to the downside in wave C, and then we look for wave C to be finished already currently on the target box. Well, then in that case, we have to count the subdegree like you see on my chart here. So he finished 5-wave impulsive structure, where you then have a diagonal in 1, 2, awkward wave 3, though 4, and then a wave of 5. However, wave 4 touched the 0.618 taken from the start to the end of 3, which is pretty much an invalidation for wave 4, so that lowers the probabilities for this scenario. Therefore, it starts to increase the probabilities for an unfinished structure, just because it is difficult from an impulsive perspective in a wave C to end wave C at the current low that we have. We either have to mess around with the impulse here, 1, 2, 3, 4, 5, 4 shorter in time than 2, and we know that wave 2, low probabilities, this is a wave 2 because on most charts the high got taken. We know that with the second scenario, wave 4 touched the 618, so that's also not something that supports a ending structure here for wave 5. So the diagonal that we have over here is very, very interesting, which also again in Discord when I was gone to France past week has been posted by Stuba, been posted by Bettina, Flotti, Samith, many more. We're looking at a diagonal structure in the Discord group. So thanks guys for sharing everything. It also helps me to keep up to date when I am not in front of the chart. So we have a 5-wave count here, then looking for a 3-wave structure in wave 1, 3-wave in 2, arguably wave 3 here, finished, look for a 4, and then another 5 to the downside. The invalidation is very simple. It is moving to the upside, taking out the high of your wave 2 at 63.8K. If price moves to the downside, then at the moment we don't want to see it go lower than this red level over here, 48.1K, which is the 1-to-1 trend-based fib extension taken from the start to the end of 3 to the current high that we have on the chart, because a wave 4 in a contracting diagonal is not allowed to be longer than wave 3. Now, something that I will keep my eye on is a channel. If you take a channel from the low of 1 to the low of 3 to the high of your wave 2, then preferably price is not going to touch the upper trend line of this channel. A contracting diagonal is by far the most common diagonal structure. The moment price touches the trend line here at the high of this channel, we cannot call it a contracting diagonal anymore. We have to call it an expanding diagonal, and an expanding diagonal is very rare, never preferred, unless all of the other scenarios fill, which it hasn't done yet. So currently, of course, the channel with the price action today is going to be about that 60K area, as you can see over here. So we preferably stay below 60K, dropping to the downside once more towards the lower 50Ks to then finish this diagonal that we have on the chart here. Now, the upper trend line of the channel is not an invalidation for a diagonal, but it does significantly decrease the probabilities for any diagonal structure. Now, the only way to really end a structure at the current low that we have would be with a complex structure. Now, preferably, especially on higher time frames, sticking with more simple structures, meaning a zigzag, flat, or triangle, is generally preferred before really starting to consider and increase probabilities for WXYs, which is a complex structure, because here we have a regular flat W, expanding flat X, zigzag in a wave Y. But I still want to cover it just for the sake of, hey, if we end this range over here and move to the upside, what's the best fitting count? Well, that would be the WXY and actually not the impulsive structures to the downside. However, this scenario does not have the highest probabilities compared to the zigzag ABC. Now, let me explain why. It has to do with wave X. So in wave X, we have an expanding flat, ABC. Now, the first thing that lowers probabilities is that your wave 2 here, or your wave C, is twice the length of A plus B. That is what the 2 represents. The vertical line on the chart is a fib time taken from the start of A to the end of B. You can see wave C is twice the length of A plus B, which does lower the probabilities. Time is never an invalidation, but it does play with the probabilities. And then we also know that on some charts, we actually have a truncation here, right? Like on Coinbase, for example, the chart that I have, we have a truncation here, but on most of the charts, at least, this high did take the high on the left, but the truncation still is not really what you like to see. And then finally, we need to have an ABC in a wave Y, where wave C touched the 0.618, which is a target for a wave C. That is a trend-based fib extension taken from the start to the end of A to the end of B. However, the 618 is a rare target for a wave C, so it doesn't really add to the probabilities over WXY. However, if price does take out a 63.8K, increasing probabilities to move towards the upside and continue to the upside in this range, then this would be a scenario to keep in mind. Now, over here, we have simple support resistance areas on the chart. Keeping things very, very simple. Of course, Elliott wave theory is very complex, so it's always nice to also use some simple things in your technical analysis, and support resistance areas are one of these. These are on the daily time frame, and you can see I basically cut this range into 3 separate pieces, right? We have the lower end, the middle over here, and then the high. And to keep things very simple, you got to move back above this resistance now, right? Was support for a long time. Got to move back above it, retest it to increase probabilities to move towards the upside, and then look for the highs of the range. Now, the resistance here is between 59.2, 60.3K. The one in the middle is 64.5 to 65.2, and then at the high, 71.2 to 72.7K. Finally, shortly looking at the lower time frames. We had bullish CVD divergences yesterday. This was very, very nice. We had an 886 touch at the high, price moving down, came back up, touched the 886 and moved down once again, increasing the probabilities to take this high because the 886 was touched. The moment an 886 is touched, the probabilities increase that this structure down is part of a corrective structure, not an impulsive structure. Plus, we had some nice bullish CVD divergences as well on the chart, which you can see over here. higher low in price, but over here we had a lower low on the CVD. So a solid bullish CVD divergence in confluence with the 886, high probabilities to move up and take this high, which is where we are at the moment. So price then moved towards the upside. Currently over here you can see we are at some resistance. This was a previous support target box, now acting as resistance, as you can see. And again at the high we do have an 886 touch. So once again, the probabilities would be on the side for this structure down to be part of a corrective structure, increasing probabilities to still take out the highs on the chart. We did have some bearish CVD divergences, and please keep an eye on those CVD divergences as well. If we get small little bounces to the upside, but bearish CVDs keep building, probabilities simply are higher to move towards the downside. We do have some interesting support to the downside here. We have a daily level at 56.6k in confluence with also the point of control of this local uptrend, as you can see. So that's definitely an area I'll at least keep my eye on, together then with the CVD divergences and of course the market structure. So if we then finally look at the probabilities of the different scenarios, then on the weekly time frame the probabilities are higher for the bullish scenarios. On the daily time frame the probabilities at the moment are higher for the zigzag ABC with an unfinished diagonal compared to a finished structure, which either is a bit of an awkward impulse or we need to use the WXY sideways double combo, which then would be the higher probability out of the options. For the probabilities though to increase for a finished structure, price has to move back into the range. I showed you the support resistance areas, but preferably take at least 63.8k before making another low. Locally, we have a touch here at the 886 at the high, which does increase the probabilities to take this high again, or at least at a bare minimum continue ranging sideways to reassess probabilities and the structures at a later stage. We also had some bearish CVDs come into play, and we have some interesting support to the downside. So keeping an eye on the bearish CVDs, as that of course increases probabilities to move down. The bearish CVDs we had here already played out, but I will be very observant and keep my eye open for new potential CVDs. And I know we do have some support at 56.6k. So mind the CVDs, bear CVDs hint on a move down, want to see signs of strength. I hope you have a great weekend. I hope you enjoy watching Euro 2024. I want to say GG to the Turkish team. It was a great match. And that being said, thanks for watching. And I hope that this video was valuable or helpful to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing. And I'd like to see you at the next one. Bye bye.